area Antoinette, we had to move classrooms because our regular classroom upstairs had two very noisy portable air conditioning units that really weren't working.
Of course, good old.
And on the first day, of course. Oh. Go ahead and share my screen. Well, good. Now that we finally found a nice school classroom with plenty of room, well, we can get underway. All right. Well, welcome everybody. This is Auditing 2, so the graduate level auditing course. And for the few of you who don't know me, my name is Will Quillian, and I'll be your professor this term. So I teach the auditing classes, undergraduate and graduate. And you'll also be having me in the future for at least the research class, accounting 6989, and probably the capstone course, accounting 6999, at least I coordinate it. And there you'll do a project of your choosing with the faculty mentor, which may or may not be me, but I do coordinate the course. And also, a lot of you are going to be having me in the second half of the semester for the broad course. How many of you are in the broad course? Okay, good. Quite a few of you. It's a 2-hour elective. As you know, in the MAC, you need to have 5 2-hour electives, so that can be one of them. Another 2 good courses in that are the CPA review courses, where you study on your own for the CPA exam using using a review provider like Lime or Becker, and I coordinate those 2 courses too. So in those, as you probably know, Florida Southern will pay for the cost of that review program up to the cost of tuition. So that's a really good bargain, and certainly a reason I think that our CPA exam pass rates are so high. And for students that have me for the first auditing course, undergraduate, and this course, they tend to do really, really well in the auditing section of the CPA exam. So I really do keep up with what's being asked. And for a lot of students, that's the first section they choose to take. So at any time, whenever you have questions about the CPA exam or anything like that, let me know. Well, in this course, what we're going to be doing is just continuing what we have done in the past in the first auditing course. Some of you didn't have me, some of you, of course, did have. So if it's been a little while since the first auditing course, not to worry, because we basically start things from scratch. And we'll have a little bit of a review here today. So first thing I'd like to do is go over the syllabus here with you, and we'll see what we're going to be studying. So looking here at the syllabus, and as you know, I don't bring paper copies. I'm not supposed to. And the other thing is right now with technology issues, guess what? I've been able to print. Go figure. Okay. So auditing, and it has a little bit of accounting information systems. How many of you have not had any exposure to accounting information systems? Have not? Okay. Sometimes we get some students in this class from other schools who did not have accounting information systems. So I do include one small unit on AIS here, and that is to reach the CPA exam education requirements, because AIS is required. So if you've already had, that's fine. That's all you have had. It'll be a little bit of a review. So that won't hurt. It'll be very easy for you too. So there's all my contact information. And office hours, I'm doing them virtually. Let's see, and some other stuff I'm supposed to have on here. Well, course description, again, we're going to be getting into additional auditing topics. And we'll get into some other topics too about services that are related to auditing, such as we'll see today, compilations, which means writing up financial statements, and reviews, which is kind of like a very scaled down audit. You'll see what I mean. So we get in some other things like that. And again, these are tests on CPA exam. Of course, prereq, first auditing course, some other things I'm supposed to have on here, like general education, student learning outcome, and all those good things. Good, I've complied. All right, you can read over those on your own. Required materials. Well, first of all, is the auditing book. And most of you probably have it, either a print edition or online. With the auditing book, I'm using the 16th edition, the most recent, the 17th edition. Guess how many changes there are? I know, virtually none. So why do publishers switch editions? I mean, exactly. So guess what is cheaper if we use this one? Any updates? Well, don't worry, they're in my notes. So we're certainly current. With this, I use it primarily as a reference book anyway. I take homework from it. I will refer to some readings in it. But again, brains we need, you're perfectly up to date. And 17th edition, it's a little bit old right now anyway, but I'm not sure how quickly they're going to come out with a new edition. And publishers in some areas have slowed down on the frequency with which they have new editions. And the reason is that there are a number of ways of saving money these days, so the profitability has gone down. And that means, okay, not quite as many new editions for some books. Not profitable enough for the authors, you know, too bad. So that means good. I'll just update things on my own. That works. I feel sorry for people who are just starting to teach something like auditing, which is a very big undertaking when you first start. But if someone is very book-based like that, it's going to be difficult. And if they're relying on the book for things like PowerPoint slides, etc., which I don't use, well, again, they're going to be in trouble. Things will get outdated on them very quickly. How many of you still need a copy of the book? Okay. So what you can do, you can have either a printed copy or an online copy or both if you prefer. And for both print and online, you can either buy or rent. So one thing that you might wish to do is to go to any one of a number of sellers. Of course, Amazon's one. Another really good place to look is bigwords.com, which searches all sellers for you, big words. And you can either buy or rent there. If you buy a copy of this book, you're going to get, including shipping, for probably under $10 if you want a printed copy of the 16th edition. 17th edition will run you a little bit more money. It's probably not worth it, to tell you the truth. You can also buy a copy of this online for the publisher's website. And here for the publisher's website, well, I don't think you want to pay their price for print, $181. You can get instant access to my accounting lab, which, as you'll see on the syllabus, is the next thing we'll need. And that's the course platform where we do homework, we do quizzes, maybe some exams, and you do need to buy access from that. If you've had Auditing 1, your My Accounting Lab access may or may not work. I can't guarantee. Sometimes students luck out and it does, and sometimes they don't. So has anybody tried it? No. Okay, I'll keep my fingers crossed. So you can always get access to that. Obviously, instant access if you would like it. So you can decide what's good for you, but at the minimum, my accounting lab, you can access that. And then with the book, again, if you want online access or print. Okay. So coming back here to the syllabus. So my accounting lab there, number 2. By the way, I refer to the textbook in the syllabus by the author's initials, AEB, and my accounting lab, MAL. So you'll see that. By the way, with my accounting lab, you do not need a course code. What you'll do is to go into Canvas and enter my accounting lab through there. You can also buy my accounting lab access as you do go into Canvas. So with that, there is a handout, which, okay, I guess I didn't have it here. That's my accounting lab, by the way. And there is actually a handout which the book has, guiding you into linking my accounting lab with Canvas. So I will go ahead and send you a link to that. Let's see if I have it on my syllabus here. Don't think I do. I think I omitted that. I'll make sure I get that to you. So a handout guiding you into my accounting lab through Canvas. Good. By the way, is anybody new to Canvas? Okay, good. Now, also on our syllabus, my discussion outlines, I've outlined almost all the topics we'll be covering. So these are available on Canvas. You need to access the modules link or files link, whichever it may say on your edition, on the left side of your screen. And please be sure to have the discussion outlines with you for each class period for the chapters we'll cover. In fact, that's probably going to say files on your edition of Canvas. Again, it can vary. Change that there. So either paper copies, or I think most of you prefer the electronic copy, just bring your computer. Now, from the AICPA, which sets auditing standards, the professional standards for auditing. And you'll see those referred to as either AU, or let me make a little change here, or AU-C. Yes. Oh, whoops, let's double check here. I think oops, I probably forgot to change the dates. Post the wrong one, but that's okay. I'll correct it very quickly if I did. All right. Let's see, fall 2021. Oh, goodness. All right. Let's correct that right now. It's easy to make a posting error like that. Because obviously I take last year's syllabus, last time I taught this class, and I build it from that. There we go. All right. Check something here. All right. I was using the correct one. So I had the correct one pulled up here on my screen. So I was going over it, but had the previous year, whoopsie, there on Canvas. So, excuse me. Now I've got the correct year on Canvas. Let me just double check here. Something. Yeah, good. Sorry about that. All right. So back with the professional standards for auditing. Well, AU stands for auditing. C stands for clarified. So several years back, the Auditing Standards Board, that's the division of the AICPA that writes auditing standards, decided to clarify the standards. In other words, rewrite them and make them easier to read. I don't know whether they really accomplished that objective or not. They're still awfully complicated. But these are like statements of financial accounting standards. These are like the Bible of where things come from. So the very source document, authoritative guidance for us. Well, what I want you to do is to skim through them, and I will have readings along with many of the topics we'll cover. Skim through them so that you know where the information we study comes from. And then, well, you don't have to read them in depth, but certainly in practice, you would be expected to have the skill of being able to look at them and extract the information you need. I don't test you on additional material from them, but again, I just expect familiarity. They get into way more detail than we need for this class, say the least. Then later in the course, we'll need that AIS textbook. Mentioned AIS. Well, you can go and get that very, very cheaply. You can get one of two editions. You can get the 10th edition or you can get the 11th edition. It's up the 11th edition, and well, it doesn't matter if the 10th edition is rather old. It has everything we need. And again, anything it doesn't have, I have in my notes. So I'll refer to that in syllabus as BH for the author's initials. And then some online materials from Blind CPA Review. Now, my accounting lab, I can link to Canvas. So you'll see the assignments on Canvas. Your scores will automatically update to Canvas, gradebook on Canvas, but Blind won't. So it's separate. And the Blind materials, it's a really good buy. We can get them for auditing for only $50. And there's the link to them. So you'll find our class website there. And I'll be posting quizzes as we go along once we've covered the material. With Glide, it's one of the two major CPA review providers, the other one being, of course, Becker. So Glide being for Dr. Irvine, who used to teach at the University of Florida and retired a number of years ago. Unfortunately, he died about a year ago. But he retired early, needless to say. He had a nice revenue stream coming in from the CPA review, plus other types of reviews too, even a private pilot's license review. So he did that, and I used to teach with him at the University of Florida on his doctoral students, so knew him well, nice guy. But his daughter, Lori, now runs the company. And with Lori, she and I served together on Florida Institute of CPA's Educational Foundation's trustees. That's Lee and Joseph does too. So we know her quite well. She provides us some good stuff. And this is one of them. So we get this. I don't think any other schools get this. So trust me, it's a bar. It will really, really, really help you prepare well for the CPA exam. I will be giving you assignments there, syllabus, and each assignment is going to involve reading through the GLI materials on that section and taking a quiz. So there are even additional problems and multiple choice questions that you can do if you'd like. I haven't assigned all. So all that's required are the ones I've assigned. Any questions there about the materials? Righty, well, evaluation, how I will be grading you. First of all, we have 2 unit exams. Last one is not comprehensive whatsoever, 300 points apiece. And online homework from my accounting lab, online quizzes from my accounting lab. Again, those both come from the textbook. So 150 and 250 in the way of points respectively. GLIME assignments 350. So again, that involves reading the modules I assign and doing the quizzes I assign. Then toward the end of the class, preparation of an abstract research topic that you might like to research, in fact, in the capstone course to the MAC program, which is $69.99. So just kind of getting you prepared for that. And I have a description of it later in the syllabus. And short class presentation for 50 points. Again, toward the end of the term, and fraud slides. Class presentation will be about those. Those will also be worth 50 points there at the end of the semester. So grades are basic 10% intervals, so 80, 90% to 100%, etc. Then exams, multiple choice and essay questions. They're not comprehensive. I'll give you information about exam coverage before each exam. Having in the past, you'll know I'll be doing that. So that way I feel that it's fair and that you know how to spread your study time out and what's expected of you. And just some other information about exams you can read over there. Exam retention, how long I keep them, homework and quizzes. You'll see that their due is specified by the assignment schedule and syllabus. And also those dates will be online in my accounting lab. So please do review your quiz and homework scores pretty often on my accounting lab and also on Canvas, just making sure that everything posts properly, making sure also that my accounting lab syncs with Canvas okay. In fact, let me put that there. Well, need to make sure that my accounting lab does sync with Canvas. Sometimes it doesn't. So if you find it doesn't, well, just let me know. Sometimes I wind up hand posting scores from my accounting lab to Canvas, and that's okay. I'd rather do that to make sure they get in there properly. As with anything else with technology, sometimes there are glitches, as we know. So we'll fix those. Well, not in this class, but I've had students in principles of managerial accounting say to me, oh, I've done all the Canvas homework and all the quizzes, and the scores just haven't posted to Canvas for my accounting lab. And of course, saying this to me at the end of the term. And I had one in the spring who tried that. So I simply emailed her back and I said, well, my accounting lab records every attempt you make on any assignment there. And I see that you only made an attempt at one quiz here at the end of the term. I gave her the date and the time. Didn't hear back from her. If I'd heard back from her, I would have definitely reported her for academic dishonesty. I felt like I should have anyway. But, you know, the point's probably going to be moot because what will happen to her? She'll wash out. Yeah. Not everyone is college material. Let's face it. They just aren't. I mean, by this stage of the game, you all are very obviously. But in that class, I get lots of different types of people and many in school for the first time. And well, it's either shape up or ship out. I have no sympathy for her. In late submission, please don't do that. Gleim CPA review, and again, I talked about that. So do the rings, the assignments, as long as you get a score of 85% or above, you'll get full credit. It's not difficult to get all those Gleim points whatsoever. Then research project, abstract, just 250 word abstract. That means a little summary, some broad slides. There's guidance for those, and we'll be going back over those toward the end of the term. Engage learning, yes, we do it. Use technology, we certainly do it. Use computers in class, please just use them for this class. Don't start doing other things because then you get disengaged. Use the phones in class, please don't use them. And again, please don't get disengaged. Incompletes, hopefully I won't have to give anything out. Academic dishonesty, please, I'm sure we won't have to worry about that. Calculators, you sure won't need them much, but you can always use them on exams. Attendance, please attend. We know that. If you can't come to class in person, I will have these classes via Zoom as I'm having right now, and I will record them and I will post them on my YouTube channel, and I will be sending you information about that, sending you a link. Release of grades, please access them online. Religious observances, if you're going to be absent for one, just let me know. A couple of us are Jewish, but we gave up the Sabbath for this class. I did go to services this morning. Then access for students with disabilities, we make reasonable accommodations. Just let us know. And any questions so far? Okay. Well then, schedule. Now, first of all, this unit will cover a day. We'll cover a little bit of a review of basic auditing concepts. I have a handout for you. And, oops, I need to take something off here. Please go ahead and delete this assignment here. That's a book that I used to require, and I don't anymore. Okay. So I've got a handout with some review materials, and Gleim assignment 1 is going to include some review material, and that'll be posted on the Gleim website quite soon. So our representative from Gleim will have that up for us. Then, also today, we'll be covering something called Statements of Standards for Accounting and Review Services. And if you look at the initials here, well, we have another acronym, so many accounting and business anyway, and that's SARS. So not to be confused with sudden acute respiratory syndrome. Now this one has one more S in it. So these will be about some other services we do in addition to audits. We'll see reviews and compilations I mentioned a bit earlier. We'll see assembly of financial statements. And I'll show you what those are. Quite easy, really. Okay, so with homework, well, I will have some handout cases. And whenever you see handout cases, you don't actually need to hand those in. So with the handout cases, they'll be in the handouts I give you online, and just do them for your own clarification. We'll go over them in class the following meeting, but you don't have to turn them in. But then I have some supplemental SSARS homework from the book, AB. So I have chapter 25. From that chapter, it covers a variety of topics. It has just a little bit of information about SSARS. You'll find in the reading there. Well, my handouts expand on that a great deal. So the book doesn't really have enough information to get you through the CPA exam, but my handouts do. So we'll do those problems there from the book. And the homework is going to consist of review questions, which are very, very basic, just getting you into some of the information a little bit more. And then we will also have multiple choice questions from old CPA exams. And we always go over all those because those are great to prepare you for the CPA exam. Multiple choice questions being the #1 test taking issue that students didn't have. We go over them carefully. We see why the right answers are right, wrong answers are wrong. Very good practice for the CPA. Then I will assign usually 1, 2, sometimes 3 small cases from the book, and we'll go over those as well. So again, do those on my accounting lab. You'll also have a quiz, and that'll be on my accounting lab. In fact, it already is. And you'll do glide assignment #2. So all this stuff is due, as you see, on September 9th, which is the day before our next class. I tend to make assignments like that. Obviously, please don't let it go until then, but I'll let you decide how to budget your time on this. Well, then, next time we meet, again, we meet roughly every other week, will be September the 10th. Then we're going to have statements of standards for attestation services. There's another acronym, the SSAEs. So attestation engagements, they're going to constitute a number of things that, again, accountants can do outside of audits. In these, we're going to have something that we approach like we're doing an audit on. We're going to come in from an outside CPA firm and give some conclusion about something that has happened because we're trusted experts. So if we get on financial statements, why can't we do all those same things, something else? For example, tonight, if we were watching a lottery drawing on TV or on the web, well, we would find on there that it has been, now it's going to depend on the lottery, what they say. It's been supervised or audited by some CPA firm. Now, Powerball says audited, and the Florida Lottery says supervised. Anyway, what they really need to say is the CPA conducted an attestation engagement about that drawing. If they said that to the general public, they wouldn't know what they're talking about, but a CPA was there observing that drawing, making sure that everything was conducted in accordance with the Lottery Commission's rules, right down to weighing the individual ping pong balls before the drawing to make sure that a single digit ball does not weigh less than a double digit ball, because single digit vol has less income. And therefore, ordinarily, as the air is going into the hopper, that single digit vol might be more likely to come up top than a double digit vol. Or in drawings, Powerball does this, where the balls fall down to be chosen instead of up as here in Florida. Well, the double digit ball might be more likely to be drawn because it's heavier and therefore it would sink to the bottom more quickly. Well, you think there's really anything to that train of thought? No. They all weigh the same. Within a tiny fraction of a gram, there's a little bit of variance or tolerance there that doesn't really affect anything, I guess. So yeah, each ping pong ball has to be weighted. And then they're locked up until the drawing to make sure that nobody weights one of them. But if you think about it, this has to be done because if it's not done, well, somebody's going to allege that drawing was fixed because their numbers didn't come in. But then there are a lot of other areas of very public attestation engagements, like with the Miss America pageant. PwC does validate for that. With the Grammys, that's KPMG. KPMG also does Oscars. Olympics, my own firm does that. EY. So yeah, there are some very visible attestation engagements. But generally along the way, you won't hear the term attestation because nobody, again, knows what it means. But attestation just means, in its simplest form, that we're giving a conclusion. Just check something here. Again, there's some homework, and that's not due till September 23rd, again, night before our next class. So the class after that on September 24th, Sarbanes-Oxley Act. So the Sarbanes-Oxley Act of 2002, 20 years ago now, made some very major changes in auditing and, well, in corporate governance in general. So we'll study the relevant sections of that. And the Sarbanes-Oxley Act did crack down on a number of things. And of course, it was in response to which horrible client? Enron, you bet. And was addressed specifically at which former national accounting firm? Yeah, Arthur Young. I'm sorry, Arthur Anderson. Whoa, Arthur Young's been a long time since they've been around. But yes, Arthur Anderson. So at that time, we had the big five CPA firms, top five national ones. Now we have the big four. Some people say final four. But Arthur Anderson is no longer here. We'll take a look at that. And then we'll also take a look at compliance audits under government auditing standards. So being CPAs, we're not going to just count for dollars. We're also going to account for compliance oftentimes. If an accountant can account for dollars, why not for compliance too? Happens all the time. So basically, if a client gets federal funding, or in most states, they get state funding, they're going to have to comply with something called government accounting standards. Those primarily address compliance, and we certainly have to here at Florida Southern. I'm on the audit committee here. I interact with our auditors a lot. Clifton Larson Allen. And our partner in charge of the audit, by the way, is in Minneapolis. And he has something like 200 schools that he's a partner in charge of. So he really, really knows higher ed. And that's good because every industry has its own quirks. Well, here in higher ed, we certainly do. And one thing, again, we've got to comply with what the federal government says. We do that primarily in relation to financial aid. So we have to have a number of internal controls in place, including going back over each student's record after a drop to make sure they've not gone too far down. We don't want them to drop down to part-time, because if we sent them in as full-time to the Department of Education for financial aid, and they drop down to part-time below 12 hours for an undergraduate student, 9 hours for a graduate student, we've got to reduce their financial aid. If we don't, we're going to have to pay back the difference. It's called question cost. Federal government's questioning that, and they will try to claw it back, as we say. Well, we've had to repay a little bit of money, but not much, thankfully. But if we kept doing that time and time again, well, then the Department of Education might really start questioning us. And there have been some schools, primarily, well, shall we say, fly-by-night schools, that have gotten students in, had them file FAFSAs, and filed this federal government and said, yeah, the students attending class here when they really weren't. So an outgrowth that is, if you have an online class, you have to turn in an assignment now within the first 10% of the class to make sure that you're actively engaged with the class. Yeah, so otherwise they may think that we just have fly-by-night students too. We don't want that. So we'll see all sorts of things about compliance here. Big business for CPAs. Then, October the 8th, Fundamentals of Accounting Information Systems. Chapters from the EIS book. Since you've all had accounting information systems, that stuff will be very easy for you, and I don't even have any assignments. Exam 1, then 2. Then, October 22nd, well, no class due to spring break, so that's 2 weeks later. Just wanted to let you know why. It'll actually be 3 weeks until the next class. We'll discuss the audit of the sales and collection cycle and related accounting information systems topics. So we'll have everything we need there involving internal controls and auditing the sales and collection cycle in which we sell goods and services to customers and we collect money from them. So that'll include chapter 14 about the basics of it, chapter 16 about accounts receivable, because that's right there in the middle, and chapter 23 about the audit of cash. Cover some topics from there, because after all, what do we want to gain from accounts receivable, which we have gotten as a result of selling goods and services to customers? Well, in the end, we want cash. So it fits in perfectly there. Then November 12th, statistical sampling and its use in audit. Well, I'll cover parts of 2 chapters on that. After all, in audit, suffice to say that we can't look at everything, although a goal of artificial intelligence in auditing is hopefully that we can have 100% audits in some areas. But if we're doing things the traditional way, shall we say manually, well, we cannot sample 100% of transactions in most areas. Instead, we've got to rely on a subset. So that's what we'll talk about there. Selecting a sample and drawing conclusions from it. I don't have to cover as much material from those chapters as I used to. Not as much now appears on the CPA exam, and that's a good thing. The reason is, again, artificial intelligence moving us toward 100% sampling. Now, law variance truly is. So good. I'm glad for that. Now, 2 weeks from then, we don't have class. Oh, and November 27th, by the way, is, let's see, it wasn't quite 2 weeks after. Let me just double check something here. And that should be November 26th. Whoops. Then our last class, December 3rd. Well, classroom presentation, brief coverage of your 2 submissions below. That'll be the abstract, the preparation slides, and exam 2 then as well. All right. Any questions so far on the assignments or anything in class? Right. By the way, from Gleim CPA Review, there's a note that our representative wrote to us, and that there is about how we can buy the Gleim package and access it. Okay. Any technical issues you have, she's very good about solving. So her name's Courtney, and you'll find her information down here. There's her email as well. All right, well, that takes care of everything there. And any questions again? Right, well, certainly if you do have questions, just let me know. Always glad to go over those with you. Okay, well, another thing that we have on the syllabus for today is just a brief review of auditing basics, and this I can cover quite easily and fairly quickly as well. Most of you are up to speed on auditing. If not, that's okay. Then you might want to come back to this and go over it a little bit more carefully on your own, certainly address any questions you have too. So as we get into auditing, probably the first thing that we would like to know is what's the definition of auditing. And there's a formal definition in the SSARS, or so-called statements of auditing standards. So those are those gold standards for what we should do and what we shouldn't do in an audit. They're promulgated, if you like that term, in other words, issued by the Auditing Standards Board. And that's the division of the ACC, as I said, that puts out the auditing standards. Those SSARS, as you may recall from the first auditing course, are codified as AU standards. Those AU standards are by topic, and one AU standard pulls together generally information from more than one SAS, so it's all there summarized for us. Well, the very, if we go way back here, in fact, and if we look at SAS 1, and that's codified as AU section 110 in paragraph 01, that's how we read that. Well, back then, it defined auditing for us, and I can give you an even simpler definition of auditing than is in there. Like a more formal definition, just click on the link. But here in auditing, it's very easy. We take financial statements and we make sure they're okay. That's it. We do that by gathering evidence. So in the case of financial audit, which is what we will discuss the most, a company has prepared its own financial statements. Its accounts did specifically. So on those financial statements, how unbiased can we expect those financial statements to be? Maybe not very unbiased. because the company always has motivation to make things look better than reality, whether it's intentionally or unintentionally, just subconscious bias. Here's the way judgments tend to be. On the balance sheet, when it comes to assets, the bias tends to be to overstate, make them look better than reality. On the balance sheet under liabilities, the client bias, again, whether intentional or unintentional, would be to do what the liabilities. Exactly. Lowers them in that case. Understate. Don't act like you owe that much. Thereby, if we take total assets and subtract total liabilities, we have equity left. That would overstate it. Like to do that. Then we go to the income statements. When it comes to revenues and gains, well, the client bias be there. Overstate. When it comes to expenses and losses, the client like to understate. Thereby overstating it. Making that look better than reality as well. Then financial statements have footnotes in it. So any information a reader might be expected to want to know should be in the footnotes. Well, clients often tend to do things like this. Make those footnotes look better than reality once again. Maybe omitting some embarrassing things or not letting on as though bad things are as bad as they are, and maybe overseeing good things. Well, we don't want that either. So we also have to audit those and make sure that they're okay. So speaking of auditing, well, again, the basic need for an auditor comes because clients may not present financial statements which are unbiased. Those financial statements are the primary means of communication outside users like investors and creditors. So that's where our job comes in. We gather and evaluate evidence about those financials to make sure they're okay. So if the client is listed an account receivable of $10,000, we may be confirming that account receivable. We'll see that later in the course, where we send a special statement directly from the auditor to that customer. Is this your correct balance or not? And return this to the auditor. That's an outside party. It gives us very, very good, reliable, unbiased information. States rules for evidence back in the first auditing course. Chapter 7. Well, really, this course, CPA exam, yes. So then we go through and we do this. Do this in all areas of financial statements. When we find things that are materially wrong, now we're not going to sweat the immaterial stuff, just the big stuff, the material stuff. When we find things that are materially wrong, we ask the client to correct those things. If they do, that's great. Audits are very often a big cleanup effort. If they don't correct the material stuff, very dumb not to. But if they don't, well, that's when we change the audit report. So all material stuff is corrected. Those financial statements are now fairly stated in accordance with GAAP and all material respects. We can say they're good. We give that client a clean it. It says everything's fine. If something's wrong, then we bring out the audit report. Clients tend to fix everything they can. If something unfixable, that's when in the audit report, it's often, it would be not clean, or as we say, qualified. because the material thing that's by the way, that material thing could be a misstatement in financial statements, like a wrong accounting number or a footnote that's not accurate, or it could be a scope limitation on the auditor's work. The auditor cannot examine all the evidence they felt they needed. Sometimes clients impose that. They say you can't look at this evidence. Or sometimes just by conditions, like records that have been destroyed. And as you can guess, a scope limitation imposed by conditions that the client can't help, that's the most common reason that an audit report is qualified or not. So just to kind of sum up what I've said here in B. So we'll concentrate on external financial audit, again, in which CPAs come from a CPA firm. Well, financials, again, are prepared by the client company's accounting function. Obviously, that client is not objective with respect to its own financials, so they can be biased. And the auditor is professionally skeptical, as we tend to say. Well, thus, the auditor does not fully believe the information in the financials until he or she corroborates it with evidence. So kind of like a judge or an umpire or a legal investigator or a scientist, we've got to see evidence to back things up. Then we're convinced. So it's kind of like trust but verify. Once we've gone through the evidence gathering process, the auditor can then attest to the financials. That means we give assurance to them through an audit report which states whether, in the auditor's opinion, whether those financials are fairly stated in accordance with GAAP in all material respects. Are they okay or not? And for an example, the audit report, there's one in chapter 3 of our textbook. If you need to review the audit report, it is in there. Again, I think most of you are up on the audit report, and we'll be seeing audit reports in this class. So I think that'll suffice really as far as reviewing the audit report. But just in case you want to go back, it's there in chapter 3. Then CPAs we'll see today. We also do reviews and compilations. We'll see what those are. And authoritative guidance here will be in the statements on standards for accounting and review services, SSARS, we'll see today. Then D, CPAs may also do other types of attestation services. We'll see those in 2 weeks. Authoritative guidance in the statements on standards for attestation engagements. The SSAEs. So those 2 different sets of standards will be not unlike auditing standards. You'll see what I mean. Of course, both types of engagements appear on the CPA exam. Any questions so far? Okay. Well, then authoritative guidance for auditing. Why we do what we do. Well, for privately held companies, authoritative guidance is provided by the Statements on Auditing Standards, the SSARS. I mentioned those are issued by the AICPA's Auditing Standards Board, and they're on the web. You could pay for a printed copy of those, but I don't think anybody really wants to. So you can access them for free there. Now, for publicly held companies, we saw in the first auditing course, the Public Companies Accounting Oversight Board, the PCAOB, technically issues authoritative guidance through its auditing standards. But guess what? They're just about like statements on auditing standards. That's good. We don't have 2 separate big sets of standards to study, and I don't think any of us would like doing that. So PCAOB was created by the Sarbanes-Oxley Act, and good news, I said, it adopted the SSARS as interim standards until it supersedes or amends them. It's done some of that, but not that much. Good. By the way, number 3, publicly held companies are those which issue publicly traded debt and or equity securities. They're often called SEC companies because they're subject to SEC regulation, sometimes called issuers. And just to remind you, number 4, you can research public companies on the Edgar database from the SEC's website. See a lot of different forms in there if you look up a publicly traded company. And Form 10-K is the one that contains audited financial statements. How many of you have ever looked up a publicly traded company on the Edgar database? Good. So Form 10-K, how long can this go on? Really, really lengthy sometimes, yes. By the way, one company that is a privately held company that still is treated like a publicly traded company by the SEC is Publix. Because the regulation was passed about 1975, which said that a company like Publix that is big enough must act like a publicly traded company, even though stock is private issue. Publix has to be an employee or former employee, or it has to be achieved by the employee. So, used to be they didn't have to report financial statements publicly. But after this regulation was passed by the SEC, they started having to. So they act just like public companies. We can access their Form 10-K also on Edgar database. Theory is that Publix being big enough, if it failed, a large enough chunk of the general public would be ripped off. So various tests for that, again, generally about 500 stockholders, a certain amount of capitalization, etc. Yeah, Publix failed. A lot of people really would lose a lot of money. And also we saw this in the first auditing course, the public company auditors must also issue an opinion on internal control under the Sarbanes-Oxley Act. And those are called 404 reports. It's a reference section of the Act which requires them. So as public auditors, we've got to audit financial statements, plus we audit internal control. And needless to say, after the Sarbanes-Oxley passed, we started having to do that. What happened to the cost of audits of publicly traded companies? Went way, way up.
So I have a question. How exactly do they audit internal audit?
Sorry, Antoinette, could you repeat it, please?
I just wanted to know, how exactly do they audit the internal audit department? I don't know whether that's like a...
The audit internal control. Basically, they do very intense tests of controls. So they will do test of controls beyond that testing that they would do for a privately held company. That makes sense?
Yeah, that makes sense. Thank you.
You bet. It's just kind of a matter of degree.
Okay.
Now, and C, all the auditors' work is based on the generally accepted auditing standards. And I'll let you review those if you need to. I don't think anybody's going to really need to review them, but for the CPA exam, again, you should. And they're also on page 35 of the textbook. And D, we're pretty well regulated, backed by the Board of Accountancy in every jurisdiction that we have. Well, regulated by the Boards of Accountancy in the state, district, or territory in which they practice. So, Florida's statutes and rules pertaining to practice public accounting are on the board's website. There's the URL. Also contains a lot of information on becoming a Florida CPA, which I hope all of you will do, of course. Get your CPA, get your MAC, and you can expect a really good career. believe me, big shortage of accountants out there. You know, we have a very inelastic demand for our services. Okay, that keeps us in business. And we have a limited supply of accountants. Not everybody's willing or capable of going through a rigorous accounting program. And once someone is trained as an accountant, becomes CPA, there are a number of other careers that are not traditional accounting careers they can get into as well, because accountants are very well trained, obviously intelligent, et cetera, et cetera. They can think, they understand business, especially after some accounting experience. So what's going to happen is that, yeah, they really come into demand. Wish for employers that I could refer them to an accountant with few years of experience when they need one. Those people are really sought after. So there aren't a lot of accountants there to fulfill the demand. So I think you all always have a good job. I really do. Now, if I taught in some other areas, I wouldn't be able to say that about all my students. Unfortunately, a lot of general business students, let's be honest. Yeah, do you think they're all going to have good careers? No. Some of them will even come back and get a second major in accounting. See it many times. Yeah, plus the supply of accountants is always constrained because, like I said, not everybody is willing or capable of going through a rigorous accounting program. And, well, we have image problems, like accounting is very difficult. Well, yeah, it is, but not due to high level math like most non-accountants think. And of course, a lot of non-accountants also think accounting, it must be boring. Well, some things are, but in general, no, it isn't. A lot of great things you can do with the accounting degree, like I said. And really all facets of the business come together when you're an accountant. You understand them quite well. And by the way, further information for accounting students you can find on the AICPA website. Get free student membership there, as well as free student membership with the Florida Institute of CPAs, CFI-CPA. And also, CPA exam administered by the AICPA in conjunction with the National Association of State Boards of Accountancy. And it's called NASBA, another acronym. There's their URL. A lot of good information for candidates who are going to be studying for the CPA exam. All right. Well, that takes care of the stuff that I wanted to review. Any questions there? Everything making sense? Okay. I think everybody's really up to speed now. So you've got information that you'll need for the topics we'll be studying. Now, as we go through class, do you prefer to have a short break midway through, or do you prefer just to go? Get it over with. Want a break? Okay. How long? 10 minutes? No break? Okay. 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 How many people say no break?
You got my vote.
Sorry?
I said you got my vote, no break.
No break. 5-minute break. Show of hands. Okay. 10-minute break. Show of hands. Yeah. So, okay, let me see a show of hands. Okay, Antoinette, we know your vote. No break. How many others say no break? No break. Antoinette, I'm not getting any other hands. Sorry about that. How many people say 5-minute break? Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. All right. Oops, that's probably going to have it. How many say 10-minute break? 1, 2, 3, 4, 5, 6, 7. Okay, so 5-minute break it is. All right. See you then. And do you have any questions so far, Antoinette?
No, everything seems pretty straightforward so far.
Good. Good. I think it will be. I'll bring us back live here. Yeah, I think it will be pretty straightforward. Yep.
Definitely.
Certainly feel free to ask any questions we go along.
Okay, thank you.
Of course. We only meet every other Saturday. And then roughly every other Saturday because we have actually the fall break and Thanksgiving. Okay, sure, no problem. Oh, righty, Antoinette. I'll go ahead and start sharing my screen here again.
Okay.
All righty, well, welcome back. And what we'll do here for the remainder of time in class is to go ahead and take a look at the so-called SSARS, Statements of Standards of Accounting and Review Services. So you'll find that these standards are going to rule the, well, really three types of engagements that we have here. And if you look at this handout I have for you on the SSARS, and everything's in here that you'll need, we're going to have three types of engagements, one called assembly, a second called compilation, a third called review of financial statements. Let's just kind of compare and contrast those. Let me bring myself back live here for a moment as I do. So with these, let's put them into perspective with audits. So first of all, in an audit, just push my board space there, camera. All familiar with the audit. Highest level of assurance possible. We give what's called positive assurance. In an audit report, we give our opinion that those financial statements are okay. So as we give our opinion, that's called positive assurance. Highest level of assurance possible. Now, in order to give positive assurance, we must have gathered the maximum amount of evidence. And we do in an audit. We don't fully believe something as we know until we see evidence to back it up. So an audit involves the highest level of assurance, the highest level of evidence, and quite frankly, the highest level of professional skepticism. In other words, we're really not willing to believe something in an audit that the client has said or asserted, balance sheet's okay, until we see evidence to back it up. Therefore, an audit has the highest fees too. We do the most. Also, the highest level of assurance to the highest level of assurance also means that that is the highest level of risk to the auditor. So an audit involves a high level of risk too. We're really responsible for things because we gave the highest level of assurance, positive assurance. Since now, if we step down from the audit, there's something else that we can do, and it's very common, called a review. So, an audit, publicly traded company must have one. They have no choice. But if we get into the realm of non-public companies, they can have audits, or for their annual financials, they might be able to have a review and save money, quite frankly. So a review is a very scaled down engagement from an audit. In a review, we gather a little evidence. Namely, we will do some inquiry to the client. We will ask them some things. We'll see. And we do some analytics. So on the first course, there's a quick and easy test for results, like financial ratios. We'll do some inquiry, we'll ask clients things, we'll do some analytical procedures like financial ratios, and we'll read those financial statements over for obvious numbers. That will be it in the way that those go. So a little bit of evidence here. That means that we were a little bit professionally skeptical. So we were somewhat professionally skeptical. Or less so than in an audit. Obviously, you gathered a lot less evidence in an audit. So what do you think about fees for a review? Cheaper. And also, the level of assurance we give is a lot less. In a review, we're going to give what's called negative assurance. Negative or sometimes called limited assurance. We'll see that in the handout. It says that we find nothing to indicate something is wrong with financials. So limited evidence gathered, we found nothing to indicate that something's wrong with financials. That's a lot less far-reaching with positive assurance, where we said that we believe the financial statements are okay. Instead, we just found no evidence that something's wrong. And there's a lot less risk to the CPA. I don't want to say auditor because we're not doing an audit, but we do have to be a CPA to do a review because we're getting some assurance. But a lot of privately held companies, non-public companies that is, do have reviews. The reason is that with reviews, well, that might do just fine. The basic reason that most non-public companies need such assurance is for creditors, especially banks. The bank might say, okay, we realize that an audit is going to be very expensive for you, but we'll sell for reviews and sure, not public. Very, very common. Now, take another step down, there is something even less called compilation. That's where the accountant takes the company's financial information. We take their books, maybe we even keep the books. And we write those up to form financial statements. So it's right up for sometimes called simply financial statements. Compilation, just right up for sometimes called simply financial statements. We just write the financial statements up to the client's books. We will give a very short report, which gives no assurance for the financial statements. No assurance. Because we gather no evidence. We gather no evidence. We're not professionally skeptical at all, so we get no assurance. It's just right up. We'll see that report, short, sweet, simple. By the way, we do not need to be independent in order to do a compilation. We'll see that. We do not need to be independent of the client to get a compilation. With audits and reviews, we must be independent because we're giving assurance. Compilation, we do not need to be independent of the client because we're giving no assurance. Should have said this, just in case I said it wrong. With compilation, we do not need to be independent of the client because no assurance. We must be independent of the client to do review or an audit. The compilation involves very, very low risk to the accountant. And obviously our fees are lower still because we gather no evidence, we're not professionally skeptical to any great degree. We give no assurance. Then there is a fourth bottom level type engagement called, in this case, actually, let me get this term right. Hang on with me. We don't have to deal with them very much, but I'll just want you to know what this is. Yeah, okay, call it simple. Make sure I got the official term from the standards. So finally, assembly of financial statements. and very few rules pertain to it. It's compilation light. I'll show you very briefly in the handout that just considered to be compilation light. You'll barely even see it on CPA exam. Most practicing accountants don't even use that term. But again, it's just right at work. There is no assurance given. And it's somewhat cheaper than a compilation. By the way, technically, you do not need to be a CPA to do a compilation or an assembly. And again, for both, you need not be independent of the client. Because again, no assurance is given. So with audits, yeah, lots of CPA firms do audits, but some CPA firms do exactly no audits. With reviews, a lot more CPA firms do them. They're not as complicated. So for example, if someone, small CPA firm, let's say, or even a sole practitioner is out there, generally they're keeping quite busy with tax work. They may do some reviews. But for a sole practitioner doing audit, that's going to be more resource intensive. So probably a really small CPA firm is doing no audits. They're probably doing reviews. Almost all of them are doing compilations and assemblies of financial statements, though. Now, with compilation or assembly, you don't have to be a CPA to do them. However, a lot of clients do come to CPAs because there's kind of a brand name preference. Out there are also accountants who practice who don't have CPA licenses. And they can do so legally, as long as they're restricting themselves down here to compilations and assemblies. Most of them are probably doing tax work, and that's okay, they can do that. Although again, there's a brand name preference for a CPA to do it. A lot of non-CPA accountants are enrolled agents. Does anybody know what that is?
I am one, that's how I
Good. Are you practicing?
Well, I work for a lot of people.
Gotcha. Non-independent tax firm, right? So yeah, an enrolled agent is taking a special exam. They can represent clients before the IRS. And also some CPAs are enrolled agents. And that's because CPA license is specific to a state, unless there's some reciprocity. It doesn't work between every state. But if they're an enrolled agent, they can go any place in the US and practice. It's not tied to a specific state. As far as compilation or assembly goes, if it's done by a CPA, generally banks are going to say, fine. They will not question the quality under which those financial statements were prepared. If they were prepared by a non-CPA accountant, the bank may question them then. Although there's some very good non-CPA accountants out there. And if a bank is saying knows one, well, knows the good reputation, they probably won't question that either. Conversely, I've known some CPAs out there that were independent practitioners or in very small firms who weren't very good. So just to let you know. All right. So actually now I'm going to come back to sharing my screen. So as we get into this here, well, some general topics. Well, first of all, let's compare and contrast audits, reviews, compilations, and preparations. Oh, I'm sorry. Really, I should make a little change here. Assembly also called preparation. And let's just make that little change. Same thing really, but the preferred term these days, preparation. So let me stop my share here for a moment. And simply, let me just again make that change. So again, compilation light. So I make sure that I go with the most preferred term today because that's probably the one you're going to see on CPA exam. Okay. So as we know, we just gone over an audit, highest level of assurance. Just kind of go through this quickly. Positive assurance, namely the financial statements taken as a whole are fairly stated in accordance with GAAP. High level of risk to the accountant means greatest amount of work, highest fees. The SEC, as we know, requires an audit of publicly traded companies. Non-public entities may also have audits, but only non-public entities for their annual financials may have reviews, compilations, or preparations. So the SARS will address these engagements. Now, let me get into preparation just to find a little bit more thoroughly here. So here in C, a preparation of financial statements is a non-attest service, so we give no opinion and does not require the accountant to determine whether he or she is independent of the client. We don't even have to think about that. It's another reason it's kind of compilation light. In a compilation, we do have to consider whether we're independent. It's the main difference, really. The preparation, we just, well, kind of go la-di-da-di, we don't care. And results in account prepare financial statements. It goes beyond bookkeeping or other assistance provided to the client if the client prepares the financials. So we might do bookkeeping as a CPA, maybe not. But in a preparation, the accountant should still understand the client's industry, its accounting practices, its financial accounting framework, could be GAAP or it could be special framework. A special framework like the cash basis that we saw briefly in the first auditing course. Well, the accountant should obtain an engagement letter. That's the contract with the client. So here's what we're going to do, client. Let's both sign off on it. Should document the engagement. In fact, how many engagements in public accounting do you think we should have where we don't document everything we do? 0. Thank you. Yep. Document, document, document. Both in this profession and in others too. By the way, he or she will not verify the accuracy or completeness of the information provided by the client's management or gather any evidence, provide any sort of conclusion on financials. So we don't even do that. No, and in fact, each page of the financial statements must be marked, no assurance is provided. Also, no report is issued. That's another reason it's compilation light. And the preparation is a very low risk engagement if performed properly. And obviously, the accountant's fees are a lot lower than in a compilation, a review, or an audit. So preparation, that's about all I need to say about it. Simple. Compilation, just a little bit more complicated. So again, involves writing up financial statements based on information which is provided by the entity or the client. Under no obligation to corroborate any of that. Therefore, the accountant provides no degree of assurance. Once again, And compilation involves a relatively low degree of risk to the accountant if performed properly. Therefore, the scope of the accountant's work is a lot less in scope than in an audit or review. His or her fees are lower. And also, unlike in that preparation, we have to determine whether we're independent. And we're also going to have to issue a compilation report. Again, the preparation had no report, a compilation will. We'll see it in a few minutes. In that review, that is bumped up by a notch over a compilation. While the review is substantially less in scope than an audit, it involves inquiries and analytical procedures regarding the financial statements and no corroborating evidence required beyond that. In audit, we gather all kinds of corroborating evidence, but not in a review. And a review provides limited assurance that no material modifications need to be made to the financials in order for them to conform to GAAP. The review report provides negative assurance. We are aware of no material modifications which need to be made. And a review involves, shall we say, a minimum amount of risk to the accountant. And also, as a CPA, we've got to be independent of the client in order to do a review. So we must be independent of the client in a review or an audit, but not necessarily so in a compilation or a preparation. So any questions there so far? All right. Well, here in Roman numeral 2, just a few definitions that we find in the SSARS. A lot of these will sound familiar back to the first auditing course, like applicable financial reporting framework. Well, it's what's been adopted by management, where appropriate, those charged with governance, like the board of trustees or board of directors. So that's what we use to prepare and present the financials. And what that means is, in a nutshell, it's either GAAP or some other accepted financial reporting framework. It could be the cash basis. It could be the income tax basis. Or it could be some special basis required, such as with insurance companies. With insurance companies, they must present 2 sets of financial statements. One's under GAAP, one is under statutory accounting principles. Special set of accounting principles designed for the insurance industry. So that would be another applicable financial reporting framework. IFRS is another financial reporting framework that a company might use. International Financial Reporting Standards. But the most common ones are obviously GAAP or the cash basis or the income tax basis. Small company, maybe the only reason it's getting financial statements prepared is to help deal with this tax return. So that would be the tax basis. So the applicable financial reporting framework is one which management's chosen. Financial reporting framework, again, that's something like GAAP or IFRS or the income tax basis or the cash basis. Remind you of that in B. Management, those are the people with executive responsibility for the conduct of the entity's operations. So they're in charge of accounting. They're in charge of internal control. They're responsible for all that. The auditor is not. Special purpose framework, again, like the cash basis or income tax basis. We covered these in the first auditing course. I'll let you read through them. I'm not really interested in spending a lot of time on those again in this class or test you on them, but again, just know what they are. Then prospective financial information. It's any financial information about the future. So if we're trying to give a budget income statement for next year, for example, that is prospective financial information. We'll see it sometimes, and this information may be presented as complete financial statements or limited to one or more elements, items, or accounts. Might be limited, in other words, to a subset of financial statements. So sometimes as a CPA, we may be asked to do a review, compilation of this. We'll see how we can do so later on. But one thing that will always be important here is that we will not vouch as far as the achievability of these prospective financial statements. So here's the budget income statement for next year. Yeah, we can take a look at, we can give a report that basically says we think it's reasonable. Again, we'll see that later on. But I want you to know that in that report that we will see later on, we never vouch the achievability of that budget income statement for next year. We never say, yeah, we think that these numbers will come true, because we cannot predict the future. As soon as we vouch for that, the information does come true. Now we just open ourselves up wide. Then in F, kind of related to it, pro forma financial information. So there's another acronym if you like. It's developed by applying pro forma adjustments to historical financial information. Now, appropriate pro forma adjustments are based on management's assumptions that give effect to all significant effects directly attributable to the transaction or event. They're stated on a basis consistent with the financial reporting framework of the reporting entity and its accounting policies under that framework, such as GAAP. And an accountant may compile it. So, very commonly, management wants to know this. Here's our income statement for last year. Here's our balance sheet for last year. What would those two have looked like if we had purchased this other company last year? So, pro forma, by the way, means as if. So what would that last year's financial statements look like as if we had purchased this other company? So go back and compile pro forma financial statements for us. And a CPA can do that. Just to let you know, well, again, we'll see them later. I just wanted to get the definition out of the way. Questions so far? Okay. Another definition, two types of requirements, the accountant. One, unconditional requirements. And it means the accountant must comply with an unconditional requirement in all cases in which such a requirement is relevant. Under the SSARS, use must to indicate an unconditional requirement. You follow it no matter what. But second, a presumptively mandatory requirement. There you might be able to get out of following it at all times. So the accountant must comply with a presumptively mandatory requirement in all cases in which such a requirement is relevant, except in rare circumstances. So we have to have justification if we don't follow it. And the SSARS use the word should to indicate a presumptively mandatory requirement. For example, sometimes it is worded that an accountant should document something. Okay, that's a presumptively mandatory requirement, but that means we better do it, unless we have a really good reason not to. And then H, I referred to this earlier about governance. Well, those charged with governance, that's a term, means the persons or organizations, for example, a corporate trustee, with the responsibility for overseeing the strategic direction of an entity and the obligations related to the accountability of the entity. This also involves overseeing the financial reporting process, so they're responsible for accounting. Those charged with governance may include management personnel, for example, executive members of a governance board or an owner manager, or again, may include directors. So who's responsible for this organization at the top? And then I. The accounting firm must have appropriate quality control. Professional judgment is used at all times, so use good judgment. We studied quality control back in the first auditing course. That's how we make sure that we keep doing quality engagements. We follow all of the authoritative guidance we should. You can stop me if you have any questions. Okay, there was some general information. Now let's get down to compilations. I don't have to say anything further about preparations of financial statements. They're just really simple. Compilation, a little bit more involved. Let's see some things regarding. And by the way, compilations and reviews are tested pretty heavily on CPA exam because they're common things the CPA firms do. So, procedures involved in a compilation. First of all, the accountant and the client must have a clear understanding of the service to be performed, and that should be documented in an engagement letter. So there's a presumptively mandatory requirement. That means let's do it. So it normally includes the description of the compilation and its limitations. It's non-audit. Don't think it is. Just good to get that right. Description of the compilation report. We will give no assurance. We'll see that in just a bit. So related to that, number 3, warnings that the compilation does not provide any assurance that errors, irregularities, or illegal acts will be detected. No, we don't give that. We're not getting paid a whole lot for this. Well, note this helps limit the accountant's risk. Many lawsuits stem from the client and or the financial statement readers not understanding this fact. However, the letter should state that the accountant will bring any errors, irregularities, or illegal acts which he or she finds in the ordinary course of compilation procedures to the client's attention. Yeah, if we find something, we'll let you know. But we don't get any assurance we'll find something. It's just kind of a byproduct of what we do if we find something. And number 4 will usually include the estimated fees, and number 5, an estimated date of completion. Number 6, we should request assistance from the client's personnel as necessary. Make sure that they have someone to get you documents, etc., if you need them. It's really important to do. And request from the client to indicate acceptance of the engagement, usually by signing a duplicate copy of the engagement letter to return the account. So we have a contract. On B, the accountant also must possess adequate knowledge of the accounting principles and practices of the client's industry. And the source of that are industry publications, AICPA industry guides, and other practitioners. Usually, if we're doing a compilation, it's so simple that we don't need to know a lot about the client. And on it, we do. Then D, the accountant obtains the financial information of the client. We get their books. No requirement to corroborate. So we don't have to gather evidence about it. And the accountant may have to perform other accounting services, such as bookkeeping, in order to arrive at an adjusted trial balance. Now, if the information the client gives us is bad, It's incomplete. It's obviously an error, or it's otherwise unsatisfactory. Should ask for additional or corrected information. If the client won't provide it, withdraw. That's clear red flag of trouble. Yeah, I heard an accountant saying that more clients have been giving them bad information or incomplete information or slow in getting them information, or they don't get them any information at all, especially since the pandemic. So it's kind of done something to client psychology there, as well as psychology in a lot of other areas too. Well, then E, the accountant then writes up the financials. We should read the financials to make sure they're in proper form, they're free from obvious material errors. Financials should also have adequate disclosure, should have footnotes. We'll see what happens if they don't, just a minute. Well, then the accountant also prepares a written compilation report on the financials. Following items must be included. And note the report provides disclaimer of opinion. Well, that means the accountant expresses no degree of assurance about the financials. So we'll have these things in there. So we'll have a statement that the management or owners are responsible for the financial statements, not the accountant. And then second, we'll identify the financial statements which have been subjected to the compilation engagement. So balance sheet, income statement, statement of cash flows, statement of stockholders' equity for the year ended December 31st, 2022. We'll identify the entity, that means the company. Then we'll specify the day or period covered by the financials, like calendar year 2022. And then number 5, we'll include a statement that the accountant performed the compilation engagement in accordance with the SSARS, which are promulgated by the Accounting and Review Services Committee of the EICPA. So we did not use the SASs, the Statements of Accounting Standards. Oftentimes that's worded that we did not use GAAS. GAAS, Generally Accepted Auditing Standards, if you remember those. We didn't use GAAS. Nope, audit did not take place. Well, then number 6 will include a statement that the accountant did not audit or review the financial statements, nor was the accountant required to perform any procedures to verify the accuracy or completeness of the information that's been provided by management, and does not express an opinion, a conclusion, nor provide any assurance on those financial statements. So we remain totally opinionless. Then number 7 will include the signature of the accountant or the accounting firm. Number 8 will include the city and state where the accountant practices. Number 9 will include the date of the report, which should be the date the accountant has completed all the procedures required by the SSARS. So not necessarily fiscal year end. Well, then G, some other notes on this compilation report. Should not refer to any other services or procedures the accountant performed. Very often, if we perform a compilation, we've also done bookkeeping for the client, usually on a monthly basis. We should not mention that because that would tend to indicate that we give assurance about financial statements in some way. Don't imply that. If we do tax work for them, don't mention that. That again might sound like, oh, this CPA really understands the client's financials and maybe is giving some implicit assurance on they must be okay. Don't do that. Number 2, just to remind us, the day of the report should be the last day of work. Number 3, Each page of the financial should refer to the compilation report, so readers won't think the financials have been audited or reviewed. You could take a look at a compilation report in your book if you would like. It's not really necessary. It's usually easier to think about these items here instead. So any questions here so far? All right. Roman numeral 3, what if we have to modify it? So I've changed it up a bit. So we just saw the standard compilation report, and that means the account did not find anything amiss in the way of incomplete or incorrect financial information or inadequate disclosure. We'll now turn to cases where the report needs to be modified because something is amiss. In each of the following cases, the accountant should first ask the client to resolve the situation if possible. Now, if we didn't ask, or if the client does not resolve the situation, then the compilation report is modified. Let's see why. First situation, the financials do not include adequate disclosure. By the way, compiled clients are usually simpler than audited clients. They may not even understand footnotes. A lot of compiled financial statements have no footnotes. And I would say in at least 75% of compilation reports, we will not have adequate disclosure, and that's viewed as okay. Instead, we just bring out that fact by adding this paragraph to the compilation report. So it says the client has elected to omit substantially all the disclosures required by GAAP. If the omitted disclosures were included, they might influence the reader's conclusions about the entity's financial position, results of operations, and cash flows. Accordingly, these financial statements are not designed for those who are not informed about such matters. And that's considered to be just fine, to tell you the truth, because most people reading those financial statements don't even care about the footnotes. Now, something else that happens in probably close to 75% of cases too. The accountant is not independent with respect to the client. Okay, well, the accountant must determine whether we're independent, and we may still perform the compilation if we're not independent. But we must state the lack of independence in the compilation report. We do not have to disclose the reason for lack of independence, but we can do so if we like. Now, the most common reason that an accountant is not independent is this. The accountant has done bookkeeping for the client. Well, if we have done bookkeeping for the client, we're compiling our own work. So we're not independent because of that. Well, let's say that we add this paragraph to the compilation report. We're not independent. And let's even say that we go on to state why. We're not independent because we have done bookkeeping work for the client. Well, most readers are going to say that's your job. Yeah, and if you've done bookkeeping work for the client, that's great. We trust you. So it's often used positive. But the only way around that for doing bookkeeping for the client is to have the client sign off on each and every journal entry we take as we start the accounting cycle. How many clients do you think want to do that? They don't. No, again, they're going to say, that's your job, you're a CPA. That's the most common reason we're not independent. Again, not really a negative thing. Now, D, this one, something's wrong. Financials materially depart from GAAP or another applicable accounting framework. And the accountant should include a separate paragraph describing the departure and its effects if we can. The report does not have to be modified, by the way, because of an uncertainty like a lawsuit, we don't know how it's going to be settled, or an inconsistency in applying accounting principles. Last year, they used straight line depreciation. This year, they use some of the years digits depreciation. I hope they don't use that. But if they switch accounting principles, we must bring it out. We do an audit report as well. We studied that back in the first auditing course. Well, then after issuing the compilation report, the accountant may discover facts which existed at the report date and which materially affect the financials. And this may lead to recalling the financials, revising them, and or revising compilation report. So it can happen. Just start all over again if it does. And by the way, if financials are accompanied by supplementary information, like some table of statistics, the account should indicate the degree of responsibility he or she is taking with respect to the supplementary information. And usually that is no responsibility at all. Questions there about compilations? All right, let's turn to a review. Again, it's not difficult. So as we know, the evidence we gather will be inquiry and analytical procedures. Here are some things that we do in the way of that. First, we'll inquire about accounting principles and practices. We'll inquire about accounting and disclosure procedures. So how'd you go about, for example, using accounting software? What software do you use? Number 3, some analytical procedures to identify unusual relationships in individual items. Large part of that is going to be a series of financial ratios that we do. So if we see some unusual change from last year to this year, let's find out why. Then number 4, we'll inquire about actions taken at board of director meetings, stockholder meetings, etc., because they discuss big picture issues there, such as if they're going to shut down an office, we'd like to see that reflected in the financial statements. And then number 5, we'll read the financial statements to consider, on the basis of information coming to the accountant's attention, whether the financial statements appear and conform with GAAP or another applicable accounting framework like the cash basis. Number 6, not too common, obtaining reports from any other accountants who audited or reviewed significant segments of the client. And number 7, some additional inquiries. Whether the financials have been prepared in conformity with GAAP or another applicable accounting framework consistently applied. There's 2, any changes in business activities or accounting principles and practices. Like, did you change from straight line depreciation to, well, something better, units production depreciation? Then matters as to which questions have arisen in the course of applying the foregoing procedures. And any events subsequent to the date of the financial statements which would have material effect on them. For example, financial statements are dated December 31st. Did anything big happen in January to you that might affect those financials? Now, in B, we should obtain a representation letter. I should say must. Obtain a representation letter from the client. So the client says, yes, we're responsible for internal control. We're responsible for the financial statements. And they'll document important items of inquiry to us in writing. It's rather similar to representation letters for audits we saw in the first auditing course. Then, in regard to internal control, in C, the account does not assess control risk in a review. In other words, the how well internal control is working. We don't have to think about that. We also don't need to conduct tests of the accounting records and test responses to inquiries by obtaining corroborating evidence. After all, review is much less in scope than an audit. Those are things we would do in an audit, but not in a review. And there's a review report in your book, but here are some things that should be in it. That's probably better to look at. So I include the following statements. A title that includes the word independent to clearly indicate that it is a report of an independent accountant. Again, we must be a CPA because we're giving a conclusion, some assurance. Then second, an addressee. Usually that's going to be the company's management or its board of directors. Number three, an introductory paragraph, which identifies the entity, name of the company that is. B, it states the financial statements, balance sheet, income statement, etc. C, it identifies, oh, I'm sorry. In B, it states the financial statements were reviewed, but in C, it identifies those specific financial statements. In D, it also specifies the date or period covered by each financial statement, like income statement for the year ended December 31st, 2020. And then E, it's going to include a statement that a review includes primarily applying analytical procedures to management's financial data and making inquiries of company management. An F will also include a statement that the review is substantially less in scope than an audit, the objective of which is the expression of an opinion regarding the financial statements as a whole, and that accordingly, the account does not express such an opinion in a review. So again, all these are things we've mentioned. Number four, there'll be a section in that review report with the heading Management's Responsibility for the Financial Statements. That includes an explanation that management is responsible for the preparation and the fair presentation of the financial statements in accordance with the applicable accounting financial reporting framework, like GAAP. This responsibility includes the design, the implementation, the maintenance of internal control, sufficient to provide a reasonable basis for the preparation and fair presentation of financial statements in accordance with that applicable financial accounting framework, again, like GAAP. So management responsible for internal control and for those financial statements themselves. Don't blame the CPA. See, we're trying to divide up responsibility there. So now, what's SCPA responsible for? Well, that's number 5. A section with the heading Accountant's Responsibility that includes the following statements. Well, the accountant's responsibility is to conduct the review engagement in accordance with SSARS, promulgated by the Accounting and Review Services Committee of the AICPA. Again, not generally accepted auditing standards, not GAS. We're not doing an audit. And the accountant's review report should also explain those standards require that the accountant perform the procedures to obtain limited or negative, same thing, assurance as a basis for reporting whether the accountant is aware of any material modifications that should be made to the financial statements for them to be in accordance with the applicable financial reporting framework. And then B, the accountant believes that the review evidence the accountant has obtained is sufficient and appropriate to provide a basis for the accountant's conclusions. And 6, a concluding section with an appropriate heading that indicates a statement about whether the accountant is aware of any material modifications that should be made to the accompanying financial statements for them to be in accordance with the applicable financial reporting framework that identifies the country of origin of those accounting principles applicable, like United States GAAP. And number 7, we'll have the signature of the accountant or the accountant's firm. Number 9, setting a state where the accountant practices. And then number 9, the day of that review report. So that's when we conclude our work. Enough said about 9. I don't need to go over the other stuff there. It's kind of a little bit too detailed. All right. Coming down to E, each page of the financial statement should be marked See Accountant's Review Report. That way, everybody knows they've been reviewed, not audited. F, to remind ourselves, we must be independent to issue the review report because we're giving assurance, we're giving a conclusion. And we do have to be a CPA. G, that review report is modified if there's material departure from GAAP or departure from another applicable accounting framework. That includes an accurate disclosure. If they don't have all footnotes there, they should have. So we should describe that departure as best we can. Now on H, the accountant usually cannot issue a review report if there's a significant scope limitation. In other words, the accountant could not perform all the inquiry or analytical procedures he or she felt was necessary, or if the client will not furnish a representation letter. Now, that sure is not going to happen very often because it does not make sense that the client brings us in to do this very limited type of engagement and then tell us that we cannot look at the very limited evidence we would gather. Now, this doesn't happen. But in case it does, we know what we do. And I, sometimes a client may change from an audit to review. That's allowed if documented properly. And the accountant must also be comfortable with the reason for the change. Sometimes clients will do that if they have problems in an audit. Since a review doesn't drill down as specifically on those problems, they may say, okay, we'll switch. It sometimes happens. Or sometimes client will switch if it's going dark. That means its stock used to be traded publicly. Now they've decided to take it off the market, or the SEC's decided for them. Well, the client probably had problems anyway. But that sometimes happens because, again, review is less stringent than an audit. So any questions there about reviews or compilations? We have the basics there. Okay, that was the longest section. The remaining sections won't be that long, and they just add some stuff to that. So I think you'll find them pretty easy. One is reporting on comparative financial statements. Well, that means more than 1 year of financial statements in comparison with each other. Like here are financial statements for the year has ended, December 31st, 2020, 2021, and 2022. Those are comparative financials. They're for comparison with each other. Just like I say here under general applicability, instead of issuing only 1 year of financials, the client issues 2 or more years together for comparative purposes. And B, the accountant may issue, or must issue, I should say, an appropriate compilation or review report which covers each of the periods presented. So each period needs to be touched by a report. So one is an updated report. It's issued by a continuing accountant. In other words, who's compiled or reviewed each of the years presented. It either re-expresses the previous conclusions or provides a different conclusion on the current year's financials on prior year's financials. And a reissued report that can be done instead. It's issued by the predecessor accountant. In other words, who compiled or reviewed the previous year's financials, but not the current year's. So that's the old accountant. They're same day as the original report, but it may be updated due to subsequently discovered events which affect the prior year's financials. These updates should be dated currently, but the body of the report should retain the original dating, dual dating. For example, if it's been updated because this company bought another company, that's fine. You would include the date that you have reviewed that transaction, compiled it, and outside of that, one transaction. The body of the report retains the original date. That's dual dating. Now in C, financials which the client prepared may be presented along with financials which were compiled or reviewed by an accountant. Well, the client prepared financials should be on separate pages. Should clearly specify the account did not compile, review, or audit them. Because quite frankly, let's say we have a client who tried to do their own using QuickBooks. Can you rely on those financials to be very well done? No, let's have them on a separate page so they don't taint the accountant compiled or reviewed financials. Now, again, each page of the compiled or reviewed financials should refer to the compilation or review report. By the way, financials for 1 year may have been reviewed or audited and presented along with financials for another year, which have been compiled, some mixture, that's okay. But the report on the financials should simply combine the appropriate audit or review report along with the appropriate compilation reports. Not a problem. Now, lastly, here in this little section, some additional clarification. When there's a new accountant, so successor accountant's the new one, predecessor is the old one. So again, every year of financial statements must be touched on by a report. So each year of accountant compiled or reviewed financials must be referred to in an appropriate compilation or review report. By the way, that predecessor is not required to reissue his or her report. Now, in B, if the predecessor does not reissue the report, successor should either do this. Refer to the predecessor's report in a separate paragraph in the report on the current year's financials. That's okay. What is less common is to perform a review or compilation, the prior year's financials that the predecessor did, issue his or her own report, compilation or review report that is on them. That is less common because that means more money. And C, just know if the predecessor reissues their report, they need to consider whether there are any subsequent events or changes that may affect the prior year's financials. Sum it up as that. Questions there on that little section? All right. Well, next little section here, a little bit of special case. Compilation reports on financial statements included in certain prescribed forms. Prescribed form like a bank loan agreement. The bank does not, in this case, want financial statements in any form. They want the client and the accountant to fill in the blanks. So fill in the blanks. For example, fill in the current fair market values of assets. Write a number in this blank. That's what we're saying here. In this case, well, that's what the bank requires. That's what's got to be done. We'll do it as the CPA. Now, just a few things we need to glean here. So in this case, again, those financials are included in a pre-prepared form required by a third party, like a bank or a regulatory agency. Now, all the requirements of the previous section still apply. This section simply provides some additional requirements. Well, in B, the nature of the form may depart from GAAP by requiring a non-GAAP accounting principle, or by requiring disclosures which are not adequate from a GAAP viewpoint. For example, instead of historical cost of assets, the bank may want current fair market values of those assets, so it knows how much they could be sold for. That's okay. Our objective is to fill in the blank the way the bank wants it. So if we depart from GAAP or some other framework, we will only do so to the extent necessary to complete the third party's requirements. So kind of elaborating on that, C, the accountant may assume that by complying with the requirements of the form, the financials will provide the third party adequate information. Therefore, any departures from GAAP are basically okay as long as they're required by that form. No problem. Now, if there are no other departures from GAAP, so everything's justified, the accountant issues the standard compilation report with a third explanatory paragraph added. So first couple of paragraphs are standard compilation report here. And everything's in there we've alluded to. We compiled the accounting balance sheet of client name as of December 31st, the related statements of income, retained earnings, and cash flows for the year that ended, included in the accounting prescribed form that's added in accordance with standards established by the AICPA. Again, not generally accepted auditing standards. While compilation is limited to presenting in the form prescribed by third party like the bank loan application, information this representation management, we have not audited or reviewed the accompanying financial statements and accordingly do not express opinion or any other form of assurance on them. So we totally disclaim an opinion. Then we add this third paragraph. These financial statements, including related disclosures, are presented in accordance with the requirements of third-party bank name like Bank of America, which differ from GAAP. Accordingly, these financial statements are not designed for those who are not informed about such differences. That gets us off the hook. Now, if there's a departure from GAAP, including an inaccurate disclosure which does not relate to the requirements of the third party, the accountant should modify his or her compilation report accordingly, as we discussed earlier. And the compilation report should also be modified if financials do not conform to all the requirements of the third party. That warns that third party. Questions there on that section? Okay. Now, next section clarifies if there's been a change of accountant. So predecessor, again, the old accountant, successor, new accountant. They really should communicate. And this information came out later because there were some problems with clients who changed CPAs and didn't tell the new CPA about problems they had. Like giving incomplete information. Well, the predecessor knew about it, but the successor accountant did not. So maybe we don't want to even take on this client. Maybe we should have full communication with the predecessor. And that's what this is about. And it's easy. So communication between successor and predecessor is encouraged, it's not required. That means we better do it. So if the successor contacts predecessor, predecessor is required to respond promptly and completely. Can't sweep things under the rug. And B, the predecessor can provide useful information to the successor in determining whether to accept the engagement. All the information about the nature of the client's business, potential problems which may be encountered. Now, a predecessor can't release the information without client permission, so usually successor gets that, fax, and then sends form over to the predecessor. That gives predecessor permission to release the information. So here are some specific items that we should include. So successor should inquire about the following items, like client's integrity. Do you want a client with low ethics? No. Disagreements with the client. You may not want that argumentative client. The need to extend compilation or review procedures, such as when the client provided incomplete or erroneous information. You might not want that client either. Client's cooperation. Ooh, we may not want an uncooperative client. And the reason for the change in accountants was understood by the predecessor. Again, we want to make sure the client is not sweeping something under the rug. Now, a predecessor may limit responses in areas in which there is current or pending litigation. Should indicate that in the response. Of course, successor should consider the implication. So it may be that by the predecessor's silence, they said everything we need to know. So they say they're currently engaged in litigation stemming from this engagement with this client. We probably don't want to accept that client. And some other inquiries are also advisable, like inadequacies in the client's accounting practices or financial information. That signals trouble. Other accounting services predecessors perform, like tax work, we might be able to pick it up. There are any areas that require a great deal of time. That can be problematic for us too. Now, the successor may also request access to certain working papers to the predecessor, audit documentation that is. That's okay. Now, the predecessor may refuse that request due to valid business reasons, otherwise they've got to give them to us. And the successor may also require the predecessor be available for consultation. Of course, that predecessor is going to be expecting to be paid for it. Any questions? All right. Well, here I'm wrapping this unit up. While reporting on personal financial statements included in written personal financial plans. So somebody's usually going to an investment advisor. They want us to compile all their assets. So in this case, keep in mind that an entity may even be a person, which it is in this case. Now, in this case, the compilation may be even more limited in scope than that specified in the previous section. Now, both following conditions must be met. This client, usually an individual again, agrees that the financials are to be used only for personal reasons and to assist financial advisors in helping the client reach his or her personal goals. Financials may not be used in conjunction with any other third party, such as an obtaining credit. In the latter case, a full-blown compilation must be performed, specified in the earlier sections. And then second, during the course of the engagement, the accountant does not note any reasons which lead to him or her to believe the financials will be made available to any other third party. So really restricted distribution here. On compilation reports should be issued. Should say the accompanying statement of financial conditions. So that means balance sheet of client. We would give the name as of December 31st was prepared solely to help you develop your personal financial plan. Accordingly, may be incomplete or contain other departures from GAAP and should not be used to obtain credit or for any other purposes other than developing your personal financial plan. We have not audited, reviewed, or compiled the statement. Well, we did do a type of compilation, but it's a really limited. It's not a full compilation, which is why we say that. All right. So that's it as far as new information there goes. And any questions? Okay. Now, as we take a look at the standard, rather this handout, there are a few little things at the end. And I'll do my share again. Just have some handy dandy information here about where can I find audited financial statements and the audit reports that accompany. So some information about issuers, some information about non-issuers too. I won't test you on this, but just in case you're curious. All right. Oh, by the way, I'm sorry. That was with the review. Oops, I should have said that earlier. Where I reviewed Auditing 1, there's just this handy dandy information at the end of that handout I won't test you on that. Just in case you ever need it. Now, with this handout, SARS, there are some handout cases. If you'll do the first 3 for next week, we'll go over those. That's all you need to do. Case 1, case 2, case 3. And of course, do the homework in the book. That's on My Accounting Lab. Do the quiz that's on My Accounting Lab from the textbook. And do the line assignments, assignment 1, assignment 2, which will be on the Gleim website for you very shortly. When she adds them, they won't take you that long either. None of this homework will. So again, do the first 3 handout cases. You don't need to put them on My Accounting Lab. You don't need to turn them in. We'll simply go over them together. And then do the homework problems in the book on My Accounting Lab. Do the quiz from the book. It's on My Accounting Lab. And do Gleim assignments 1 and 2, which will shortly be up on the Gleim website for you. Got it? So no questions or anything? All right, well, very good. That's what I've got for you today. So I will see you back in 2 weeks. Take care. Good Shabbos. All right, thanks, Antoinette, and I'll see you in a couple of weeks. Let me know if you have any questions, okay? Bye-bye.